Was there anything negative in this quarter at this point? Anything that concerns you? Because I got most people saying positive, positive, positive.
No, it's hard to really find a lot of fault. I think you picked out a lot of the positive things that came out of the quarter. If you look back at 2018, what really drove this relative stock performance among the internet stocks that I cover, Google, Amazon, Netflix, et cetera, was really negative earnings revisions driven by kind of expanding expense growth. And what we're seeing now is an improvement in that arena. So you're right, revenues were strong at over 30% ad revenue growth at Facebook. But really the key takeaway here is the company is beginning to rein in some of the expense growth that we saw last year. A lot of that was related to trying to deal with some of the safety and security issues that we all know about. And that's a signal, I think, that we're starting to see the FTC settlement or nearing a settlement, the expense growth starting to slow. These are all signals that maybe we can start to put some of this behind them. The company hasn't been talking a lot about this publicly, but behind the scenes, they continue to invest heavily in new products and new innovation. And that's what I think investors are excited about, is things like shopping on Instagram, even virtual reality that we don't hear a lot about. The company behind the scenes is investing heavily, feels very optimistic about the outlook. And I think that's reflected in the results.
How big an opportunity is shopping on Instagram? I mean, not that you can't do it now,
Sure.
But it's going to change in terms of the experience, is my understanding, or at least they're working on that.
Yeah, we're taking steps towards, I wouldn't think of this turning into Amazon where you click a button and a product shows up at your home. I think what all media companies, including Google for the last 15 years, has been trying to do is close the loop, right? Make from ads to transaction, closing that loop. The more you can do that, the more value you can attribute to the ads, to the advertiser, the higher the ad prices go. When you think about the drivers of Facebook's ad revenue growth, if it's user growth, engagement growth, ad load, and pricing, really the main thing that you have to bet on is pricing. How do you get pricing higher? You show greater value of those ads, and the way you do that is helping advertisers better measure the return on those ads, and that's really what they're trying to do. I think thinking of this as being an online retailer or an e-commerce company is many years down the road, and maybe not even something the company is trying to achieve.
On that FTC number, I mean, clearly the number itself didn't spook investors.
Yeah.
And seem to indicate they're getting close to
Yes.
a settlement there. Is there any chance or any risk in your view that the FTC could actually require them to change behavior when it comes to dealing with user information privacy?
I think it's a great point, Sarah, because everyone's focused on the number. They're not actually thinking about what kind of consents they might have to enter into and how that might change.
Europe's done that before.
Absolutely. So I think you're spot on that it's good to get that number out there. It's 1% of the market cap at most. It's, I think you pointed out earlier in the program, it's a quarter's worth of free cash flow. It's more about and I don't really have an idea. I don't think any of us really know. So it's still a bit of an overhang there. The market may be ignoring a little too much right now.
Let's get to valuation. I have some people want to talk to me about a 20 GAAP numbers that could be higher than $10.50 a share. I don't know where you are.
Yeah.
A, where are you? And B, what's an appropriate multiple in your opinion for the stock?
It's not an unreasonable number. I tend to be a bit more conservative, so I think we're in the $8 or $9 range, so we're a bit lower than that. But the stock is trading somewhere in the 20 to 24 times GAAP earnings. Take a couple points off for cash, ex-cash, low 20s, maybe even high teens number for a company that's growing 30% top line. And importantly, earnings should start to more closely grow in line with revenue growth. Like I said earlier, the costs are starting to rein in. So we see a path over the next 12 to 18 months where expenses should start to grow more in line with revenue. And with 30, maybe 12 months out, you're talking about 25% growth. You're looking at maybe closer to 25% earnings growth for a company trading at 20, 22, 23 times GAAP earnings. That's a great value, I think, for investors.
If you sort of zoom out and see what we've learned so far this earnings season, Facebook had a good quarter, Twitter had a good quarter.
Yes.
Snap had a pretty decent quarter. Who's taking market share from whom on digital advertising?
So one of the themes coming out with the social media or internet media companies that you reference right there is an improvement in MAU trends, user trends, either because of product improvements, which we're seeing from Snap and Twitter, or because some of the regulatory overhangs and the news headlines for a company like Facebook are starting to get behind us, and the users are starting to engage more. So that is certainly a theme coming out. The other theme is reining in of expenses that were kind of out of control for some of these companies last year. That's another theme. And the overall theme is the ad market is strong. These companies continue to put up very strong 20, 30% ad growth. So the ad market is strong, despite the fact that some of the comps are pretty difficult. We had World Comp.
They're not fighting for share.
They don't seem to be fighting for share. Now, we'll see what, Amazon is not, Amazon,
but I also want to ask about Alphabet.
Yeah.
I mean, can we expect, given a strong quarter, given what we've seen so far?
Well, out of Facebook, Twitter, and Snap, we've seen very good indicators of the health of the digital ad market. The correlation between Facebook's results and Alphabet's results tend to be quite high, well over 90% correlation between revenue growth there. So, the read-throughs are typically quite good there. So YouTube has been a star at Google, like Instagram has been a star at Facebook. Obviously, the search business continues to be kind of the engine that continues to deliver, 15% plus growth no matter what. So we're pretty optimistic. In fact, earlier this year, I demoted Amazon and upped Google as my top pick, and I'm pretty constructive on Alphabet right now, both because of the top line ad trends that we're seeing, but also, again, they're benefiting from these same expense dynamics that I talked about earlier.